I contemplated even making this video for a few different reasons, but I've decided I think it would be very interesting. So what we're going to cover today is the 3 methods that manipulating traders can make in order to basically manipulate the price wherever they want. So first of all, what I want to say is in traditional US markets, all of these practices are 100% illegal and carry fines and sometimes even possible jail time. So this stuff that I'm about to show you, I just want you to know, be cautious. Do not do this. Instead, I think that once you learn these techniques and see how they're done, you're going to be able to spot them from a mile away. Okay? So without further ado, we are going to dive into the 3 methods that crypto traders use in order to just manipulate a market. Method number 1, spoofing. You have heard about spoofing before. I'd say about 80% of viewers probably have. This is pretty much the simplest thing you can do. It's really easy. It's not as effective, but it can be sometimes, yeah. What is spoofing, guys? So do you guys know an order book where people match orders? What happens when a trader puts out a crazy large order? Let's say that the average limit order, just the average size, is $5 grand. And then out of nowhere, there is a, $575,000 order. That's going to affect the market, whether you like it or not. So why do people do this? First of all, if you are actually trying to buy $570,000 worth of something, you should not place out that bid. So a lot of times when people place bids and offers this large, it's because they're trying to manipulate the market. This is placing a large limit order with the intention of moving the market in the opposite direction. So we place that $575,000 bid, price flies. Or getting filled in the opposite direction of your spoof order. Both, again, are illegal. But what it would look like for option A of moving the market, well, what tends to happen is very straightforward. They place a bid. Maybe they raise the bid a little bit higher to keep putting that pressure on. Price goes up. And then when they're happy, when they've sold out, or when they just don't want to do it anymore, when they don't want to push the price up, they pull the bid. And then price tends to fall. Guys, why is it that price tends to rise when people place massive bids? 2 main reasons. The first reason is just AI bots and front running. A lot of bots, you guys might not know this, but a lot of bots these days are actually AI. And there are other bots that are actually coded to look at the limit order book as well and to front run. So it is a dominant strategy to front run large limit orders. If they're resting limit orders and they're not moving, then it can be a very good strategy. This being said, there can be front running wars where someone places a large bid, let's say at 5, and then another person places one at 5.1, 5.2, and then people try to keep front running each other. That's pretty straightforward. You want to always be the best bid, to try to do that. Another reason that can happen, another thing that can happen is some bots might be order book bots, So if there's a large bid, they just might start market buying up the offers, just market buy. Also, traders might be manipulated as well. Of course, if a guy sees a large bid, I don't really think he wants to sell a lot of the time. Typically, what they're going to want to do, if they've already wanted to buy, if they're already wanting to buy, that might make them buy sooner because there's a large bid, right? So that's option A. Option B, getting filled in the opposite direction. This is really easy, but essentially imagine that you put out a string of limit sells that are pretty small, and as you place that large bid down here, price just naturally is going to fill up all those cells. Once all those sell orders have filled, one just cancels the bid and moves on. And that's how you can fill a very large order using spoofing. This is not the most effective market manipulation. You've seen it before. I've seen it before a million times, but it's not that effective. The main drawback of this, guys, is if you get filled, if a manipulator gets filled on their spoof order. So imagine that $527,000 futures order. Imagine that someone actually got filled and someone shorted $527,000 worth. That'd be a nightmare, and that's what spoofers have to deal with. Okay, here's what it looks like. This is 100% a spoof order. I did some research on this exact thing that happened. It was a collective 212 million US dollars. Yeah, 212 million trying to sell Bitcoin. I want you to go look at the very second that these orders were placed. what did you see happen with the price candlesticks, right? This was a long time ago, but this still happens today. When this set of $212 million was set, you can see price right down. Yeah, that's just very naturally going to happen. Price did go back up, but I want you to think most about the initial reaction of the order, because spoofing, what it relies on isn't what happens in 5 hours. It's not. It's what happens right now. And right now, price went down from 85,400, immediately just, nosedived down. What was it? 1.5K or something. So yeah, that is very much likely spoofing, because that order was actually canceled. None of it was filled. So I wonder why they placed it. Momentum ignition. Okay, now this is where it gets a lot more manipulative, guys. I don't know if you've heard about MI before, but this is the most aggressive of the three methods by far. Also the most expensive too. So let's cover what this looks like. This is a combination of continuously spoofing an order book and also market buying or market selling. Let's cover what manipulators will do when they're pushing the price higher. If they're doing that, they're going to place the bid at the best bid right here. And then they're going to continue to cancel that order and continue to be the best bid. At the same exact time as they're, always the best bid, they're going to be just firing market order, market buy, market buy, market buy. And they're doing that to pick off offers and physically raise the price higher and higher. So when momentum ignition happens, you'll notice this happens all the time, guys. There's so many examples. I chose to show actually something else because this is so common. Trust me. But what tends to happen is within a few minutes, typically the price is just jacked way higher. Yeah. And what's going to happen is that will continue to happen until they just stop. And then they sell out and make a lot of money. So yeah, the reason why this works is obviously it raises the price. But another reason is it's going to lead to bots traders removing their limit sells, because why would I want to limit sell? If I have a limit sell here and I see a guy just, bid, market buy, I don't want to sell there because I know I'm just going to get run over. I don't want to sell. I'm going to cancel my order and just back off, because why would I sell? Additionally, let's say I'm bearish on Bitcoin and Bitcoin just tears higher. I don't think I really want to just market sell. Why would I do that? Or I don't know, whatever asset you want to put in. Now, this can also lead to other traders placing bids and market buys of their own at inflated prices too. And that's what the manipulator really wants. And of course, the final stage of momentum ignition is liquidation of over leveraged traders. And this is really sad, but momentum ignitions can push price into uncharted territory just a lot higher, which would just liquidate everyone, liquidate all the shorts. And that forced buying from all those shorts is going to lead these manipulators, these buyers to sell at an inflated price, courtesy of the liquidated shorts. Yeah. This can also be used as lead lag. So I don't want to get too into this, but yeah, lead lag is essentially when someone manipulates a less liquid market in order to manipulate a more liquid market. It is actually very possible. So imagine that there's a spot market and a futures market. And the spot market is trading at 1% of the volume of the futures market. You might think that if momentum ignition were to happen on that spot market with people putting bid, classic momentum ignition and market buying on spot, it would have no effect on the futures. Completely wrong. They would have an absolute effect on the futures because of the index price of the futures. Yeah. What would happen is bots and market makers would see the index price of the spot token going up on the futures price, and they would probably notice that and they would start buying it up as well. So that's a lead lag version of momentum ignition. I don't want to get too into that though, but it doesn't always have to be on it's not always going to be done on the exact product that someone's trying to make money on, if that makes sense. So with selling, it's just everything's inverted, but I can read it out to you. So if we're manipulating the price lower, which hopefully, don't ever do this. You place offer at best offer, you continue to cancel, and you just boom, 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 boom. You can also, what I didn't talk about the last one is stacking, also known as layering. Stacking or layering offers or bids is also illegal, and stacking offers just asserts more control over the market. Just basically you are in full control of where that market goes. Now, the rest of it you probably already know. I want to talk, but before we go into the final method, and I'm going to tell you the final method is the most common, but by far the most powerful. And it's not even close. I'm going to show that to you in the next method. This one, I just want to cover because this is momentum ignition. And I know that my webcam is like covering up a little bit, but you can see basically this is a very simple explanation of how it all works. I did not create this, by the way. So essentially, price is static. You know, you get it, nothing happens. Then manipulation happens. So manipulators place those bids in the ignition period. They buy. And let me move this. And you can see the manipulator then eventually sells and profits from the market. Yeah, that's how it works. It's pretty straightforward, actually. Two ways it can be done. Either the manipulator can pre-buy, like buy before they start manipulating, or their buying can actually be done as they manipulate. As people sell to their bid and as they market buy from offers. Both work. And then you have the cool-off period or the call-off period, whatever you want to call it. All right, before I show the third method, why are these methods so powerful and why are they so not just profitable and powerful, but prevalent? All three Ps. A lot of people believe, guys, that you cannot predict the future. You will not be able to beat the market. The only way to beat the market is to control the market. And I know that sounds very sad, but you know, some people do have that belief that it's a random walk. It's random. There's just too many factors at play for you to ever be able to have a long-term edge on any asset. Whether that is true or not, it's not the case. What is the case is that these three illegal methods are essentially taking that quote-unquote random walk, or I hope that I make money, and basically putting a stranglehold over the market so that it makes the money. What I will say is I think when these kinds of things happen, it tends to be a select few who are making money from the majority of people losing money, especially if people are just slapping the price higher than lower and liquidating everyone. That's probably net bad for the majority of traders in that market. Obviously. So the reason why this happens is because, you know, if you're a big firm, you don't have a lot of oversight, you can do these strategies and maybe not get caught, and you can make boatloads of money, and you don't have to worry about predicting anything. All you have to do, if you want to be a, you know, bad guy manipulator, is focus on manipulating bots that will try to front run you or market buy, market sell, and traders and mislead them. Let's go to the final one. The most profitable is something you've heard of. It is wash trading. Wash trading is by far the most insidious. There's a lot of reasons why people wash trade, and we're going to talk about other reasons too. You may have seen this before, but this type of trading is so common in crypto, we don't even talk about it. This, like I had said, is the most effective form of market manipulation for a lot of reasons. It's using two accounts to self-trade in either a spot market or a futures market. I have noticed it more in spot markets, though. I haven't noticed it as much in futures markets, whereas momentum ignition is pretty much all futures. So keep that in mind. Trader buys spot token on account one. So let's say the manipulator, he buys, I don't know, 20 grand worth of some crappy illiquid token. Then he places a limit sell higher on that same account. He opens a new account. Account two buys that limit sell. And now account two holds a little bit of that currency. Then guess what? Account one places an even higher sell. Account two buys that one as well. You keep rinse, repeat, rinse, repeat, rinse, repeat. You're self-trading higher and higher and higher and higher and higher. Yeah. Eventually, after self-trading that upward enough to a high enough price, eventually what's going to always happen, guaranteed, this does not happen, this doesn't last forever, is they will sell all their holdings at a massively inflated price. And I have a beautiful example that I'm about to show you. Direct example from Mexi. Now, this manipulation tends to work best as other markets for the token will also likely rise, giving legitimacy to the price the manipulator created. The example I'm about to show you is called Love Terminal. It's some stupid DeFi token that some guy manipulated like crazy. Why does this work? Well, that coin terminal might be having, arbitrage bots on it. And it's those arbitrage bots that are actually giving legitimacy to this strategy. You want to know how? Well, Imagine that someone does this self-trading on Mexi, just pushing the price higher and higher and higher. That DeFi token has to rise because of arbitrage, right? It has to. Because if the DeFi token doesn't rise, guys like me, arbitrage people, we're just going to buy it up on DeFi and then sell it on Mexi. So they rise together, which gives legitimacy to the wash trading that's occurring. Okay? Now, let's go cover, first of all, what it looks like. All right. This is confirmed 100%. 1,000,000% wash trading. And I will show you it. Look how normal this is. This is a crappy token. No one cares about it. This is the 1 second time frame, by the way. It's just fallen. No one cares about this. This is just going to die. Oh, what is that large buy? Huh, I wonder why there's just such a large buy right here. Why did price just go up 433%? Like, what's happening? Look at this. Yeah. Do you see the wash trading, guys? Do you see the consistent volume? Do you see the one tick higher every time? Yeah. There are a few, forks in the road from people trying to sell out, but maybe because of arbitrage or maybe because they bought earlier and just sold. But do you see how clear as day this wash trading is? Yeah, very clear. And even in some downturns, they just bought it right back up. Okay? What I'm convinced on with these downturns, do you want to know why I think they went right back up? I think it's because of arbitrage. I think it's because maybe traders on Mexi crazy sold everything they had, but then on DeFi it didn't react, and then traders just bought it right back up to the DeFi price, off exchange. So yeah, this was wash trading, and you can see, look at this, it survived all these dumps, and yeah, they just continue to do it. Now I'm going to show you, and then this is the end. Yeah. Do you want to know the sign of when price is about to fall? There's a really clear sign. When the musical chair stops, when the volume stops. Look at this. What happened right before this drop? What do you see? Every few seconds there's been, oh, one tick higher, I buy, account one, account two. Very clear wash trading on Mexi. What happens here? The music stops. It's over. There's no more wash trading. And the price goes, wait, what? Then the manipulator sells, and then everyone just goes crazy, and it goes down, and it goes down like crazy here. Yeah. This, my friend, I can show you in the 1 minute as well, but this, my friend, is wash trading, and this is what it looks like. Yeah. And you can see then price fell, and then the wash trading, I think, did not resume. This is just natural price movement, maybe arbitrage or price discovery, Yeah. That is wash trading. How much money did that guy make? I can show you. So I'm assuming this guy bought here. It's so obvious he did. Come on, man. It's so obvious what this guy was doing. He pushed the price up 444%. And he was able to lock in a very large profit. What I think this guy probably did, he probably bought it on DeFi and then also bought it on Mexi. Yeah, just grabbed as much liquidity as he can. He bought it on DeFi, through Uniswap, whatever. Then he bought it on Mexi, and then he just manipulated the price on Mexi, pushed it higher, and then sold all at once. That's wash trading, my friend. This can be done on other venues too. You can see this done on Polymarket, but that is so much tougher because of a lot of reasons. I don't know. That's really difficult to do. NFTs are so easy. Guys, I would venture every single NFT that has had at least 10 transactions has wash trading. Every single one. But NFTs are kind of a joke at this point. No one cares. And also incredibly illiquid DeFi tokens, such as non-graduated Pump.Fun tokens. You'll see this happen on Pump.Fun all the time. For this to work, market's got to be really illiquid to pull this off, such as, that's pretty illiquid, my friend. Especially because the volume traded was tiny. If you want to know the average size of the manipulating guy, the guy who manipulated this, his average size was tiny. Of the amount of currency, it was 188,000. Not too much money. And look how much he pushed the price up. 203,000. But also, he's not buying from another guy. He's buying from himself. It's so clear that this is wash trading. He's not... If he was buying from other traders, it doesn't look like that. It won't. Because that's just not the way that markets work, my friend. People don't just place a limit sell one tick higher, one tick higher, one tick higher, unless they're manipulating. This is not natural. And no amount of arguing that would ever change my mind. So, yeah. The two ways, yeah, markets must be very illiquid, like that one, or a manipulator has to have enough assets to survive P&L hits. The issue with people who do this, you might start doing this where you buy a little bit here, then you put a limit sell higher. It's just some problems with that is what if someone just sells like crazy into you? You just lose. That's it. You just lose. You know, you could continue trying to wash trade higher and higher with those limit sells and then market buy, limit sell. But eventually, you know, you just lose. Front running isn't as much of an issue. It can be, but typically when people see wash trading, I don't think they're going to front run you. Like what I mean by that is placing a limit sell below your sell. The biggest problem with this is people attacking you by selling. And this guy got attacked multiple times, as you can see. People tried to sell as much liquidity as they could possibly can, but he survived. He survived this clearly. He survived all these sells by just continuing to wash trade. So, yeah. Wash trading can also be done by exchanges to manipulate their volume. A lot of places do this. Also by market makers in order to make more rewards from the exchange. This happens all the time. So what people might do is self-trade so that it looks like, hey, we did 100 million in volume on your exchange. You owe me 500K. You know, something like that. So that is going to be it for the 3 dark arts. Again, do not do any of these things, guys. Don't be that stupid. Instead, you will now have the tools to find wash trading, momentum ignition, and obviously spoofing. The least effective, the most aggressive, but probably the second most effective, and then by far the most effective. The most effective on Bitcoin is momentum ignition, though. And that's one you see happen time and time again. But on illiquid tokens, wash trading is just dominant, very sadly. Happy trading, everyone. Hopefully you learned something and something to avoid. When you see things like this, you can now say what it is. When you see things like, I don't know, this, you can say what it is. And when you see prices that look like that, you know what it is. Happy trading. Take a look at the courses I have. Also, my Discord linked below. See you guys.